Getting a bank to partner with you as a credit builder program is the difference between making a few $1,000s a month and building a real business that scales to 6 or 7 figures. But here's what people miss. This isn't about pitching a business model. This is about showing banks a customer's transformation that they cannot ignore. I've done this from both sides. I've operated in the gray zone where you're doing everything yourself, and I'm building now the legitimate bank partnership that actually lasts. And I can tell you, the banks who are partnering with you, they're not looking for a pitch. They're looking for proof that you can deliver results. So in this video, I'm showing you exactly how to get banks to work with you, the transformation you deliver, the system that you use to deliver it, and how to position it to banks, and what happens after they say yes. Part 1, what banks actually want, the customer transformation. There's a massive market of underserved people with income, with hustle, and consistency. The banks, there is a pain point reaching this market, and this is where you come in as a real person that has the cultural resonance, just being yourself in front of a camera, reaching that culture of underserved people. You are the valuable proposition. You are the marketer because you're being yourself and being real. The culture can resonate with, that can reach that target market of the bank. Here's the problem. These people of the underserved, they have the income, they got the hustle, they got the consistency, but they have the credit profiles that don't reflect their actual financial capacity. So these constraints, the thin files, the weak history, unstructured mix of credit, misunderstanding this system that we're unlocking today. They're locked out even though they have this income and hustle. So with these banks and where they come in the picture, they're looking for proof that you can take someone from locked out to credit qualified. The key though with this, the banks, they don't want a partnership. They want a customer transformation engine. They want proof that you can deliver results. So here's this walkthrough of this transformation of how you deliver this. So starting from point A, this profile of this underserved person that's thin, that's weak, that's unstructured, and that's just a misunderstood outlook of their profile. To point B, structured, a profile that is recognized as bankable, a profile that's recognized and demonstrates it's rich in optionality. Let's take a deeper look and really viscerally understand this. Point A, it's confused, it's cautious, and it's tired of feeling locked out, feeling like it's not in the system being respected, where it's inaccessible to the prime credit worthiness that gets them a car when they need it for their family, that gets them that credit card that allows them to invest into properties to cash flow them so that they don't have to live paycheck to paycheck anymore. Point B, now this transformation, this is the feeling of clarity. This is the feeling of confidence when you apply for that high limit credit product and you know you're going to get approved. That investment property, you know you can acquire. On the other end, when you get that property, the cash flow that frees you, that makes you feel that freedom again. This is the feeling of being in control of your life and getting that control back over yourself, over you being able to get out of something and transform yourself into a prime version where everybody now can rely on you. They can depend on you again. You are that source. You are that provider. That's the transformation. Now, what matters to the banks, they get access to a customer segment they can't reach without someone marketing, resonating with the culture the way that you do. They get a proven system that delivers results. They get revenue without operational burden. Now let's think about this deeper for a second. Banks get customers who become credit worthy, that are bankable for them directly. You get revenue. Customers, they're the ones that get access. Everyone wins. Now, all of these things, it sounds great, right? Or what's the catch? Like, what's things that we need to watch out for? Well, we'll start out with banks. Unproven systems, compliance issues, customers who don't pay, and reputational damage throughout all of those elements. Now, let's bring in what's being differentiated and how you differentiate through all of that. So you aren't in those predicaments and bringing the banks in a predicament like that. You have a proven system. You have documentation. You have proof of results. Most people show up with just pure ideas. You show up with a transformation engine. Part 2, the system, how you deliver the transformation. I'm gonna walk you through this 9-step process that takes a customer from point A to point B. From step 1, reframe. The customer learns, credit is architecture. It's not magic. This customer that was misunderstanding the system and what you might not be aware of as well, credit is architectural. This is something that is possible that you can generate through a partnering bank and their furnishing capability. The furnishing is the mechanism that generates the ability to architect credit. It's not the furnishing itself, it's the effect of what furnishing is capable of. Step 2, accessing a recommended individual product or a bundle, a suite of products, all in one buy-in. When you buy into this program, you have the eligibility to have your specific situation solved. Whether if you just want one credit product or if you need all 5 to 10 products all in one time, you are prescribing the solution to that person's tailored situation right now. So you're not treating everybody the same. Step 3 is enrolling in disclosures. You want to set up upfront the expectations, everything this user is going to know before they even use your software, that they need to expect before they buy into your partnering bank's credit products. So this is with full transparency. You want to set clear agreements that every single product they use has to be agreed to separately. This is required, and proper onboarding. Every time someone signs up, you want to have proper, in compliance, regulated onboarding that allows the bank to be at ease in their mind, knowing that all of your onboarding is above board, that they have to be governed over as well by the regulators and gotta adhere to themselves. Now, we want to emphasize this piece right here. Compliance and transparency, guiding your end users through the whole process of buying into your partnering bank's products. That's very important. These banks are issuing these accounts on your behalf. They're the ones booking these revolving lines of credit and these installment loans for you and reporting these, furnishing them to your software client's report. We also want to emphasize separating each product agreement that obligates them to every single product they buy into, individually or the bundle. Every single one they have to have a signed agreement to, because each of those accounts, without the obligation that they sign away, an agreement saying that they will pay on time, an agreement that obligates that they will take care of being responsible, making sure they perform well on these accounts. This is very important that you set up in your software behavior-based reporting that's securing with tracking with recording the performance of each end user to each of those products. How are you making sure there is an incentive in place to enforce positive feelings that makes them want to keep paying on time? How do you incentivize good payment history, making sure they pay every month on time, every time, consistently? Setting up no guarantees as a disclosure around the outcome of them being able to get a car, the outcome of their credit score jumping 200 points. We don't want to set up any guarantees through the FCRA, through the TILA, through consumer law, because that will go against the proper regulating compliance way of doing this the right way. We don't want to set any credit profile outcomes. We know the program is going to program. We know the credit builder is going to credit build. We don't want to set any outcomes. We just want to let the customer enjoy the experience and just use this software. They already know what they're signing up for. This is where you build trust. Step 4, account origination. The banks, they are issuing, because they're a bank, real credit accounts, which is the great news about this. Multiple accounts if needed. So your partnering bank, they're providing a lot of power on the back end system of your entire operation, of this software you're building. Your software is just the front end piece. You handle your part, they're going to handle the furnishing capabilities and take care of all of the furnishing for you. And this is the amazing thing, integrating yourself as the infrastructure operator only. They've already had experience exchanging data to the bureaus, being a furnisher built in to their bank. You don't even need to touch any of that sensitive information. They're going to touch all of the data that's sensitive of this customer of yours. You are just managing the experience. This is the beautiful thing about this partnership. This is where architecture becomes real, not theory. Real accounts, real obligations, real reporting. Step 5, behavior automation. You want to have elements in place that allows your customer buying into this software to have auto pay set up on these accounts. So they don't got to think about it. They're paying on time every time, effortlessly. A schedule that allows them to be in the loop. So ahead of time, there's reminders in place, emailed to them, notified to them, straight to their phone, straight to their laptop of when the next payment is due every single month. You want to have rules of utilizing this credit and making sure they optimize the best use of this service through your platform using your credit builder program. And you want to have a monthly checklist that helps them make the best choices to improve their financial health. This is magic. You make the perfect behavior the default, seamlessly built into the whole process of this service experience from your partnering bank, from your financial platform, from your service. The customer doesn't have to have willpower. The system does all of that work on their behalf. Step 6, reporting and momentum. This is where the customer sees results. Clean payment history, account status, utilization. They're building credit that sticks. On behalf with the bank reporting to the bureaus, the customer's progress being monitored where they can see it in real time through a dashboard inside of their account. Disputes that you, through the platform you have, they have built into their dashboard. They can easily access and guide them through if they need to dispute any of your accounts through the consumer law. They have the power to dispute through if need be. Step 7, graduation upgrades. If your customer performs, that user can add lines, upgrade into bundles, and increase their credit limit. Upgrades, I prefer them to be earned. Optional, I think that it should be. No instant jumps. This is responsible credit building. This is what banks respect. Step 8, optionality activation. The customer now, after going through your credit building process, your program, and they've been building their history, and now they got 6 months to a year plus worth of credit history of on-time perfect payments, your customer now has options. They're no longer locked out, and they can make better financial decisions. Step 9, maintain and protect. The transformation through this program, the effects of having all of this strong profile strength, it becomes permanent. It's not a temporary thing. What that equates to now in their lifestyle, this is long-term credit strength that enables them to have these options of having transportation. If they need to go apply for a car loan of a brand new car, they can move around, get that family van, they can get that house. This system, the reason why this works is because it's proven, it's compliant, it delivers measurable results, and it's repeatable. This is not theory. This is a system that's based from what works, what's already working. This is what banks are looking for. By the way, if you want help building this exact system and pitch strategy that gets banks to say yes, I want to show you the frameworks I am using right now. This framework, it's in a system broken down in a 9-step system. This is a checklist of compliance, a structure of the pitch that makes the bank say yes, and the transformation framework that gets the customer from where they're at right now to prime level credit worthy of long-term credit strength that's strong. This is the playbook that's the first 90 days allowing you to get these things in effect, to get all of these frameworks up and running, to start this platform and build it and actually start making money, getting these partnerships, allowing these customers to buy in and influence for the greater good and change their lives with this platform. Click the first link in the description for that. Part 3, how to position this to banks. I'm gonna walk you through the banks that you want to target and how to identify them. Community banks, credit unions, banks with innovation programs. So you want to look for these banks that already have done partnerships for fintech fintechs, banks that already have existing fintech programs, banks that have ambitious room and ideas for growing their business model around their banking. The right contact to get in conversation with these banks, it's business development and partnership teams. You need somebody with budget authority and decision-making power, someone who's looking for opportunities. And how to research to get in contact with the right bank, you want to understand the current products that each bank that you're vetting currently holds. You want to see what is their position on what market they're targeting, how they are marketing to reach this market. What is their strategy around the marketing they're using and the growth that they're trying to accumulate? And this shows, once you do all of these elements, it shows that you've done your homework when you're reaching out to them. When you show them and demonstrate all of these elements to them in that conversation, in their mind, when you reach out, they're going to respect you way more than you know and view you as an operator that knows what they're talking about and who understands the mechanics and all of the elements around a business of this stature, which is great. This is exactly how they want to perceive a partner. So what you want to say in the outreach when you do get in contact, you want to reach out introducing who you are, what problem that you're solving, and what transformation you deliver, and why now. You want to lead with the transformation, not the technology. So for example, I have a system that takes underserved customers from locked out to credit worthy. Here's how it works. Here's why you need it. So let's break down the structure of this pitch that you're going to be getting in contact with these banks and telling them. You want to share the opportunity that this market they're currently marketing in, the customers that are underserved, the transformation that you're delivering, point A to point B, the system that delivers it, the 9-step system that I've mentioned, and the benefit that they're going to be receiving, the new revenue, the new customers, the zero cost, and this near zero credit risk that the operation is going to come with. This is the narrative. It's problem, transformation, system, benefit. When you first bring this to the meeting, when you're talking to these people, to these banks, at that pitch, you want to talk about the plan. You want to talk about the compliance documentation, the system overview, the customer results, and the research you've done on your market, the proof. You want to emphasize this. Around that, it's the documentation of your compliance, that's effective compliance, and the results of your customers. This is what differentiates you from everyone else pitching about this. Let's say, for example, around handling objections. Let's say they say, we've never done this before, versus how do you ensure compliance, versus what's your track record? Show proof. Credit strong, self, kickoff. For compliance, show your documentation and show your system. And for track record, show customer results. Part 4, what happens after they've said yes and how to scale. So to walk you through this process of this due diligence, the legal review, compliance audit, software security assessment, after they say yes, 30 to 60 days, expect to have multiple teams that are looking over doing the due diligence. They're going to be reviewing your company. They're going to be reviewing the system that you've mentioned to them. They're going to be reviewing every single element after they've said yes to your pitch. This is normal and you've already been prepared for this moment. All right. Now, the congratulations first, once you get that yes, you need to know that after this due diligence, they're going to be in a negotiation with you. And now what gets negotiated, the revenue split, the user limits, the reporting, and what's required around this reporting, and the responsibilities they need from out of you as well about the compliance. Know what's negotiable and what's not negotiable for you. Revenue split is negotiable. Compliance, that is not. Once these are done taking place, you're going to show them how to onboard your first clients. Start small with 10 to 20 users to prove the system works. These first users are everything. The banks, they're watching. Are they onboarding smoothly? Are they paying on time? Is the system delivering results? What banks want to see in the first 90 days? Clean reporting, zero compliance issues, user growth, positive customer feedback, measurable credit improvement. This is critical window. The first 90 days, that determines whether they extend or walk away. Nail this and you're in. To prove that it works, this is how you scale after you do that. You want to increase the capacity of users inside of that program of yours. You want to add more bank partners business. This is going to help expand product offerings. Now, multiple bank partners, I can't emphasize this enough, equals multiple revenue streams, which equate to a real business. You want to diversify more cash flow streams. This is the long-term play in all of this. You are essentially building a portfolio of bank partnerships, each with their own customer base, each with their own revenue stream. That is the vision. This is how you build a real business, not dependent on one bank, diversified and resilient. Here's what I know. Most people who try this get rejected because they approach this like they're asking for a favor instead of bringing real value. They don't understand that banks are businesses looking for growth opportunities. They're not looking to do charity work. They're looking for a system that can take underserved customers and make them credit worthy. If you can show them that system and you can prove it works, they'll work with you. The key is understanding that you are not pitching them a product. You are not asking for a favor. You're showing them a customer transformation engine. You are the bridge between the bank and a market they can't reach. You are the one who understands both the system and the customer. That's where the power is. If you want the exact frameworks I use to structure these partnerships and get these banks to say yes, click the link in the description. I'll walk you through it. Peace.